The US dollar is holding firmly at about the strongest levels in 3 months against its rival currencies. How long can the greenback assert strength? Now investors are focused on the Fed's policy meeting that will kick off on Wednesday, July 28. How are markets trading in anticipation of this crucial event? Are there any other events to impact on trading sentiment? Let's discuss it in the video calendar on InstaForex TV channel. Sitting on the sidelines of the Fed's policy meeting, traders will take notice of business sentiment among German managers. The monthly survey by the IFO Institute is likely to encourage investors in July. In the last report, the Business Climate Index rose to the highest level since November 2018. The indicator is expected to print a higher score in July. It means that the largest Eurozone's economy is quickly gaining traction. Following the news, the euro will be the asset for active buying for a short while. On Tuesday, the high priority for market participants will be a report on US durable goods orders. Back in May, the volume of orders spiked amid a sharp rebound of orders for vehicles. Besides, the total volume of durable goods orders went back to the positive territory following a slump in April. This time, analysts project the orders to ease the pace of growth to 2.1% in June and months. Another thing to be in mind is that the actual reading for the last month slightly undershot expectations. Perhaps on Tuesday, investors will find out a slightly weaker rise than in the forecast. If it actually happens, the US dollar will come under pressure. On Wednesday, the economic calendar reminds traders about inflation data from Australia and Canada. When it comes to consumer prices in Australia, the annual rate of consumer inflation could have accelerated sharply in the second quarter. The situation in Australia is in tune with the inflation trend in other countries. Due to the low base effect, the CPI is likely to jump to 3.8% on a yearly basis, thus surpassing the target level set by the Federal Reserve of Australia. On the back of inflation acceleration, the central bank will have to take radical measures and raise the official cash rate. Such hawkish moves will assure traders to resume long positions on the Australian dollar. In Canada, consumer inflation is speeding up to the highest rate since May 2011. Nevertheless, traders turn attention to the inflation dynamic for a shorter period. Canada's CPI is projected to edge down to 0.4% in June on months. That is a bit lower than a 0.5% increase in the previous 3 months. It's difficult to predict the market response to this news of secondary importance. All eyes are on the crucial event later on the week. The Federal Open Market Committee is due to announce its policy decision to wrap up the 2-day meeting. Market participants are certain that the official funds rate will be put on hold. However, investors will be more interested in whether the rate-setting committee is going to change its rhetoric towards more hawkish. Last time, the regulator decided to bring forward the timeline of tightening monetary policy and introduce 2 rate hikes by the end of the next year. Such a reversion served as a catalyst for the US dollar's rally, which is still going on. Hence, investors are anticipating more hints from the US Central Bank that could either reinforce or, on the contrary, weaken the US dollar. Meanwhile, the Federal Reserve fine-tunes its policy to the conditions of the labor market, with a focus on employment. You are watching Forex Trader Calendar on InstaForex TV channel. We wish you profitable deals and have nice trading with InstaForex.